I arrived the day before yesterday from New York, and there's 12-hour time difference. So right now in New York it's about 3:40 a.m. So I'll try my best to be clear. And all right, in today's presentation, I will talk about the Japanese bubble economy happened in the 1980s, and what kind of policy lessons can China learn from the Japanese experience. So in today's presentation, I will briefly talk about the historical origins of the Japanese bubble economy, focusing on financial liberalization pattern, and then compare some structural commonalities and differences compared with the current situation of asset and credit market situation in China. And lastly, I'll talk about some brief policy implication for China. That's the order. Before jumping onto the specifics, let me share with the main argument I'm trying to present in today's presentation. My main argument is that scholars have emphasized that proper sequencing and pacing of financial deregulation or financial liberalization is critical to make financial liberalization successful. Such kind of proper sequencing and pacing has been repeatedly emphasized, but in today's presentation, I'll try to highlight financial deregulation for financial liberalization should go hand in hand with a new, better kind of financial regulatory governance that is so essential for make a successful financial liberalization. Let me first briefly introduce the dynamics of a boom and bust cycle of the Japanese bubble economy happened in the 1980s. If you look at this chart, in the 1980s, Japanese land prices in major urban areas increased about more than 4 times. And at the same time, during the period, stock prices increased more than 5.8 times. As we can see, it's a dramatic increase in the 1980s. And then the Japanese bubble economy burst in 1991, after that continuously falling land prices and then stock prices. So Japanese economy suffered for a long, long time. And according to Japanese government official estimation in 2001, in a decade after the burst of the Japanese bubble economy, Japanese economy's capital loss was estimated more than 1,300 trillion yen, which was amounting to the total national saving of 2001 and 2 times of GDP of 2001 in Japan. So many Japanese scholars describe the 1990s as a decade, the lost decade. So we need to think about what kind of things went wrong in the Japanese case. There are many structural factors and policy-related factors. But in today's presentation, let me focus on specific financial liberalization happened on the high domestic savings, which is quite similar situation now China is facing at the moment. One of most fundamental structural factor was the deceleration of economic growth rate. In the previous session, many scholars and economists have already pointed out Chinese GDP growth rate is in decline and probably decelerated, so how to increase productivity, that was the main subject of the previous session. Likewise, if you see this chart, in the Japanese case, in the 1950s and 60s, so-called during the high economic growth period, annual GDP growth rate more than 13%. In fact, it was higher than the Chinese GDP growth rate for the past 3 decades. And around the late 1960s, Japanese economy already reached the second largest economy in the world, and that status lasted about 4 decades. But as we can see from this chart, from the early 1970s, Japanese GDP growth rate went down below 10% annual growth rate and continuously went down. That was the situation. In the 1970s, as you know well, stagflation in the global economy and 2 times of oil crisis. So it was really challenging in the Japanese context. And Japanese economy was facing both external economic imbalances and domestic economic imbalances. this is also quite similar situation China is facing at the moment. So external imbalances basically means that Japanese economic growth strategy was based on exports and investment-driven growth strategies. And at the same time, Japanese domestic saving was pretty high, and investment rate also pretty high. But domestic consumption level was pretty low. These structural features are quite similar Chinese economy is facing at the moment. Under such kind of context, Japanese policymakers and scholars and elite, they try to think about Japanese economic structure, more specifically industrial structure needs to be transformed. Then what kind of strategies would be good to make industrial transformation successful? That was the fundamental question. And in the Japanese context, scholars and then policymakers thought financial innovation or upgrading the Japanese financial system, relatively backward financial system. So upgrading financial system would be critical to make the industrial transformation successful. So under such kind of situations, Japanese government and policymakers tried to diversify the funding sources to the economy. So literally means that Japanese financial system was based on banks. So bank-centered financial system is a quite similar situation right now in China. And the Japanese government tried to reduce the overall reliance on bank financing. That was the strategy. And for that purpose, tried to develop capital market, stock market and bond market, in general securities market. That was the strategy. Another important thing is that liberalizing capital account. So capital account was already gradually liberalized in Japan, but Japanese government elite tried to accelerate this capital account. At the same time, from the early 1960s, Japanese government started to liberalize, adopted a couple of measures to liberalize foreign exchange. These series of financial liberalism measures had a great impact about the pattern of I'm sorry, it's a mess up. Okay, pattern of Japanese banks, loan distribution. I'm sorry about this, mess up, but if you look at this chart, the red bar is the Japanese bank loan toward the manufacturing sector. So in the 1960s and 70s, almost half and more than 40% of bank loans directed toward the manufacturing sector because Japanese economic growth strategy was based on manufacturing sector and promoting export. That was the strategy. But from 1980 and the 1990, overall ratio, the share of bank loans toward the manufacturing sector reduced from 32% of total bank loans into less than 16% of total bank loans. Meanwhile, those bank loans directed toward the construction and real estate sector and wholesale and retail business sectors rapidly increased. So in other words, these construction, real estate, and wholesale and retail businesses were regarded as more domestic market-oriented and consumption-oriented economic activities. So Japanese policymakers, it's a mistake, but regarded this kind of increasing bank loans toward these domestic market-oriented sectors as relatively positive signal to the Japanese macroeconomy. That was the situation. So let me go back to this chart. I'm sorry about this mess up. The real important aspect is that this pattern, the change of bank loans happened in the 1980s in Japan, highlights the paradox of excessive savings, paradox of excessive domestic savings. In other words, Japanese people continuously saved a lot. So bank deposit continuously grow. If you look at this, the line bar, that's the overall total outstanding amount of bank loans. If you look at this one, in 1980, outstanding total bank loans was about 100 trillion yen, but in a decade, total bank loans increased more than about 4 trillion yen. So overall, bank loans increased about 4 times in the 1980s. In other words, Japanese people continuously saved more, saved more. So from the banker's point of view, their primary sources of interest is circulating those deposits. But as a result of developing securities market and the liberalizing foreign exchange market, those Japanese big companies, particularly manufacturing sector oriented, big companies engaging in export, they could borrow directly from international market, and they could borrow directly from the capital market from foreign financial institutions. As a result, Japanese banks lost their major corporate loan borrowers in the 1980s. So under such kind of situations, Japanese banks were forced into mediating those increasing deposit to those domestic market-oriented industrial sectors. That was the pattern. Another important dimension is the external imbalances. This chart highlights the U.S. trade deficit. The overall scale has been on the rise. But if you look at the relative share of Japanese trade surplus against the U.S. economy in the 1980s went over 40%. And in 1991, the peak period when the Japanese bubble occurred, the Japanese trade surplus against the United States went over more than 65%. These days, we are talking about, here in the United States, they are talking about the China factor as the primary sources of American trade deficit. But if you look at this one, current level is below 50%, but more than 40%, 47 something. So in the United States, people are talking about the China factor in terms of explaining United States chronic trade deficit. So under this kind of external imbalances, chronic trade surpluses, Japan was pressured by the US government continuously. Specifically, appreciating Japanese yen, foreign exchange rate policy was the primary target of the US government. Under such kind of situations, in 1985, I guess many of you must be familiar with the Plaza Accord, the Plaza Agreement. So 5 countries got together, including the United States, Japan, Britain, Germany, and then France. Those 5 countries got together and agreed about the appreciation of Japanese exchange rate. So Japanese exchange rate almost abruptly appreciated almost 2 times in 1985. So such kind of abrupt appreciation of Japanese yen caused deflationary pressures to the Japanese economy. And under such kind of situations, the Bank of Japan adopted a continued low interest policy, monetary loosening policy. So if you look at this one, over interest rate, discount rate of the Bank of Japan was lowered and then tried to provide more money to the economy. So it was a typical example of monetary loosening policy. So as a result, in the late 1980s, more money supply as a result of quantitative easing in monetary policy happened. At the same time, in the late 1980s, those officials of the Bank of Japan, they focused more on overall price stability, not the systemic risk of overheated asset market or skyrocketing stock market, but their primary focus was the general price level. But if we just look at the consumption, the CPI, just 1 minute. Okay, CPI, at that time it was relatively stable. So the officials of Japanese Bank of Japan, they could not detect the overheated economic condition. But in 1989, Japanese officials of the Bank of Japan, they abruptly increased because they came to realize that asset market and stock market overheated. So they abruptly increased interest rate from their 2.5% to 6%. So it added some shock to the macroeconomy. Second important policy dimension is fiscal policy. After the deceleration of economic growth rate, Japanese government, particularly from the late 1970s, was suffering from chronic fiscal deficit. So from the late 1970s, Japanese government started to issue government bonds. So debt financing government bonds, that was the issue. So in the late 1980s, as a result of booming asset and stock market, government revenue has been on the rise, and Japanese government did not have to issue more government bonds. So officials of the Ministry of Finance regarded this kind of increasing tax revenue and reducing government bond reliance as a positive signal to the macroeconomy. So they did not detect the systemic risks of overheated asset and stock markets at that time. So from the Japanese case, we can get a couple of important lessons. The first lesson is that macroeconomic policy coordination is very important. As we can understand, monetary policy, fiscal policy, and foreign exchange rate policy, all other different kinds of macroeconomic policies should be fine-tuned. So coordination mechanism is so important, but sometimes certain bureaus and government agencies in charge of foreign exchange rate, and that policy-making process is pursued or implemented separate from fiscal policy or monetary policy. In the Japanese context, fiscal policy always dominated in the government economic policy making. So in the previous session, one of presenters pointed out, a fiscal condition in the local government in China that will have, important implication. Second important thing is that, as existing literature scholars have pointed out, proper sequencing and pacing of financial deregulation is really critical, but such kind of financial deregulation need to go with macro-prudential regulations, in a sense, new regulations. So financial liberalization is not a process of just financial deregulation, getting rid of existing regulations, but at the same time, introducing new, better kind of regulation is so critical. Third point is, this is the last important structural point. In terms of designing some optimal combination of policy measures for financial liberalization, Japanese policymakers did not pay attention enough to the demand side of the economy. So more specifically, at that time, Japanese economic actors or economic sectors, they were not suffering from lack of available funding for investment. That was not the real problem. But based on some external pressures and normative pressures, financial innovation or liberalization is better for increasing better allocation of financial resources. So that kind of somewhat wrong assumption, normative pressure, based on that, they try to diversify the supply side of funding, financial funding to the economy. So as a result, diversified channels of fundings actually added oversupply of credit to the economy, although Japanese economic actors and sectors were not suffering from lack of available fundings. So from a practical point of view, here in China, policymakers, those people who are in charge of macroeconomic policy making, need to quite seriously what kind of economic sectors or actors they need more additional funding resources in terms of designing financial liberalization measures or sequence and pacing of financial liberalization. And other part, I prepared a lot, but let me highlight just a couple of things. China's economy is facing quite similar structure. We can observe both external and internal imbalances, and Chinese policymakers attempting to transform the Chinese economic structure. As far as I know, that's the primary theme of this conference, right? And then in that context, as far as I know, Chinese policymakers also try to upgrade the Chinese financial system. So interest rate has been liberalized in the banking sector and the developing bond market and stock market, and then capital account and foreign exchange have been gradually liberalized. So this is the high domestic saving letter. Let me move on. And China's government introduced interest rate liberalization policy since the early 2000s. As a result, one of the important consequences is the rapid growth of interbank market. That's really critical. And then in terms of bond market, out of 26 trillion outstanding bond market, 25 trillion yuan is the interbank bond market. So banking sector funding is channeled into capital market as a result of gradual deregulation of the banking sector. That's the pattern. And more importantly, off-balance sheet banking activities has been on the rise in China. According to the People's Bank of China, in 2012, outstanding off-balance sheet activities of Chinese banks is estimated about 48 trillion yuan, which is amounting to about 36% of on-balance sheet activities of Chinese banks. So how to regulate and supervise, monitor these activities is really critical. The point is that these increasing off-balance sheet activities are quite closely interconnected with the growing shadow banking activities. Professor Schiller pointed out, shadow banking actually has contributed to financial. That's true. But the point is, the shadow banking sector is growingly interconnected with off-balance sheet banking activities. So it's really difficult to make conventional monetary policy effective in controlling the Chinese, for instance, money supply. This is the interbank rate and money supply. It could not be properly controlled. But let me, because I'm already over time, so let me just point out the last point. I just quickly move on. But in today's presentation, let me share this aspect. If all these asset bubble or credit bubble happening in China, whether it's bubble, I don't know, but if such kind of activities are still contained within the domestic Chinese financial market, it can be properly resolved. In fact, the Chinese government has successful experience in the late 1990s and early 2000s, successfully resolved the non-performing loan problem in the Chinese banking sector. So if all these banking activities, whether it's off-balance sheet or shadow banking, all these activities are contained within the domestic financial market, it can be properly prevented or prevented in a preemptive way. But the point is that growing carry trade is a serious systemic challenge to the Chinese financial system at the moment. So carry trade is basically targeting differences of interest rate in the domestic Chinese financial market and international financial market, but at the same time, gradually changing foreign exchange rate. So overall, volume of cross-border renminbi flow has been on the rise. And as you know, well, Chinese government tried to internationalize the yuan and launched a series of measures. So consequently, the overall volume of cross-border capital flow has been on the rise. So the point is that this is the exchange rate when the Chinese government adopted, managed the floating exchange rate system in 2005. And since then, Chinese yuan value has been gradually appreciated. As a result, capital and financial account, in other words, cross-border capital volume, the scope of fluctuation has been on the rise. So as a result, external debt, so currently China's external debt is estimated more than $1 trillion, and out of that short-term debt ratio is more than 67%. So in other words, when the Asian financial crisis happened, those Asian economies, short-term debt ratio was below 60%, but the current short-term debt ratio is pretty high. Another important vulnerability is that in the Chinese banking sector, the position of foreign exchange purchase is already more than 25%. So Chinese banks, foreign exchange related credit is estimated more than 25%. So the scope of fluctuation of foreign exchange rate or foreign exchange market itself can cause quite serious systemic risk to the Chinese financial system. Conclusion, the first point is I fully understand that Chinese yuan will be internationalized, will require the status of reserve currency in the end. That will be the historical path. But in terms of liberalizing capital account and foreign exchange, Chinese government need to take much slower and gradual approach. I think that would be better. And second point is any rush attempts to internationalize the yuan may promote the shadow banking sector, which is related to targeting those to interest rate fluctuation and foreign exchange rate fluctuation and short-term short-term profit, particularly booming area of the construction or real estate sector, will trigger a kind of, the current asset and credit bubble in China. The third point is that reducing the oversupply of credit and focusing more on the demand side of the economy would be important. And at the moment, Chinese government can think about some various kinds of unconventional monetary measures as a preventive measure. And yes, that's my presentation. Thanks.